So let's bring it all down to our market street on Broad Street here in Lagos, Nigeria's financial capital. Samuel Musa, who is a fixed income dealer at FSDH Merchant Bank, is joining us from FMDQ Place, downtown Lagos, to have this conversation with us. Good morning, Samuel.
Good morning, Bosin.
Great to have you. What is the macroeconomic playbook that you're looking at FSDH right now for the fixed income market? Is it inflation? Is it the second quarter GDP, or your outlook on Q3? Is it the MTF FSP? Is it the budget for 2020? Is it a cabinet? Is it the Economic Advisory Council? Does that look like enough items on your menu?
I mean, the list is quite exhaustive, and then you just went through a couple of them. It's actually a culmination of all of those factors that you have just mentioned. And to a large extent, as much as you would think that one of these indices would have a greater impact, on the direction of yields and activity in the market, it doesn't essentially play out that way. So to a large extent, the market evolves, and then as the market trend, results, you then take a cue from that.
So, what do you think what is the biggest story? We're wrapping up the third quarter and trying to get everyone's insight into the final quarter of the year, very critical period. We're getting into that holiday mood now for everyone. Once we roll off September, folks will start making plans for December, as it were. Technically 90 days to the end of the year. So what is your outlook from FSDH here on where the yield curve will be in terms of activities of traders and investors in debt markets?
Okay, so I think typically it would be the activity in the bonds market to a large extent that would set the tone of the yields going forward. For the treasury bills markets, we've seen some level of relative stability, and then to a large extent that market has been impacted, or is actually impacted by the level of liquidity in the system. So the level of liquidity in the system determined by FAC inflows and other inflows that you have into the system from maturing treasury bills and the likes will sort of set the tone for the direction of rates in the treasury bills market. But like I mentioned, for the bonds market, the amount on offer at each periodic bond auction would also to a large extent impact activity. Now, if you would recall, at the August bond auction, the DMO offered a total of 145 billion, and the subscription levels were quite low, and they were able to sell about 59.5 billion. But what's actually intuitive from the August bond auction is the range of bids. Investors were willing to buy bonds as high as 15.75. So the range of bids was between 12.75 and 15.75. That shows a spread of 300 basis points. To a large extent, we could say that that could have been impacted by the level of liquidity at the time. So markets was actually short by over 300 billion. Now, compared to what we saw at the FGN bond auction yesterday, so again, the DMO offered 150 billion. This time, they were able to sell 146 billion across the three tenors on offer: the 5-year bond, the 10-year bond, and the 30-year bond. Again, we saw the stop rates clearing higher than what we had at the auction in August. We saw stop rates clear at 14.39, 14.59, and then 14.64. So, which is pretty much the levels that we have in the secondary market today. What I think going forward is that we would see some activity pretty much around these same levels. We might see yields drop by 10 basis points, go up by 10 basis points, but activity would basically hover around these current levels.
Very interesting perspective, and bringing us to speed the last 24 hours, as it were, on fixed income market. Thank you so much, Samuel Musa, fixed income dealer at FSDH Merchant Bank.
You're welcome.
Thank you. We appreciate your time. So let's talk about the clock ticking, tick-tock for the banks. They have up to Monday next week to come up with 60% ratio loan-to-deposit balance book. That's what the central bank says should happen by 30th of September. Most of these banks are listed on the Nigerian Stock Exchange and our stock market, and that's where capital markets analyst Rotimi Fakaijo is joining us live from this morning to give us his perspective on this countdown to the LDR 60% September 30 deadline. Rotimi, good morning.
Good morning.
Okay, so let's hit the ground running. What's your outlook on this countdown to this new deadline for the banks?
From what we see here, there is actually no difference being made to when it wasn't and when it is right now. Because we believe that most of the banks listed on the exchange, especially the tier 1 banks, may be able to meet up with the deadline. And should they not be able to meet up with the deadline, definitely is not going to impact too negatively on their performance outlook for the year. Because presently they are doing lending, and there has been a track record of first quarter, second quarter of good performance. And if the loan-to-deposit ratio of as prescribed by the CBN is not met by that September 30th, then definitely I don't really see much impact, except for the penalty that they will have to impose, which I also believe that since such portion of the fund, of the deposit that they have, was not being utilized before, it may not really make much of a difference. But I believe strongly that we are seeing improved and improvised lending in the banking sector since this deadline was given in order for to boost the activities in the real sector. And I believe strongly that now there is an improved consumer lending within the banks, to their customers, I believe something good is definitely going to happen, and it's going to improve their profit outlook.
Well, would you think perhaps the financial regulator or the central bank will extend this deadline, perhaps say, well, let's give you guys maybe till the end of December? Maybe.
Well, to me, I think that would be the better thing to do, because if you look at it critically, the deadline or the period before the deadline is quite short, and so that they don't go and make mistake and lower their risk assessment of who will be borrowers. And I think as such is definitely be more appropriate by the CBN before the end of this month, before the end of this week, to make a further statement that, okay, we are extending the deadline to December 31st, and that thereafter everything should keep running.
Okay, give us a sense of the market right now. It looks all quiet. Yesterday, 0.25%, a quarter of a percent in the negative territory, even though volume came up much sharply higher than we had Monday and Tuesday. This was close to 500 million shares yesterday, and the banks took that in their stride, was up 0.23%, but the rest of the market was sluggish.
Well, I think it's getting better this morning because the present position of the market is 0.14% positive, and Access Bank is actually topping the gainers list for now. I believe that the market has started better today than it did yesterday and the day before yesterday. And so what that implies is that we may begin to see a better outlook before the end of the month. And that definitely, I believe, the market may be able to upkeep what it is presently and even improve on it before the close of market today.
Okay, that's a nice one. Thank you so much, Rotimi. We'll check in with you in the days ahead. Thank you coming through to us from the trading floor at the Nigerian Stock Exchange. Just a quick one to wrap it up for you. You may want to see the data, just in case you missed it yesterday. We finished off about 0.25% in the negative territory at the stock markets. Our equity cap dipped a little bit to 13.281 trillion naira. In terms of volume, you heard that earlier, just well above 400 million in naira value. That was much better. In terms of transactions or the number of deals, a little bit consistent with Tuesday's figure. Then you find the banking sector up by 0.2%. Consumer goods was 0.5% in the positive territory, but industrial goods dragged the market by that small margin. Insurance came back really hot, 2.99%. Leave it there for today, shall we? Tomorrow is Friday. Let's go for TGI of tomorrow, shall we? We got some big stories to talk about before we lay back for the weekend. See you then, everyone.